All right, we are here. We're back. We're back. I'm going to just give it some time and let people come in and join us. If you are here from YouTube, if you are heard about us on Facebook, I'm just going to give you some time before I jump into it, and then we'll jump into the conversation. So we'll just give it about another minute or so, Mark.
Yep, yep.
Looks like I know sometimes YouTube can have a little delay, and so I'll usually have somebody out in the field telling me that we are live.
Right.
Okay, about another 30 seconds or so. All right, I think we are officially live.
Good deal. Good deal. Let's do it.
So so let's do this. Let's do this. Welcome back. It's Monday. It's Monday. We're here for another edition of What's in My Bag, Lunch Money Talks. So sorry, I'm messing with my camera a little bit here. I'm off center. Let me see. Maybe this is the problem. Thought I had that. Okay, okay. It's mirrored me. I think that's it. All right, so we're back. I'm gonna jump into the disclaimer and then we will get on with the show. So um all of the content I share today is for educational and informational purposes only and is based on our own experiences. Investing in the stock market always comes with risk. Please make sure you're doing your own research or consulting with a licensed financial advisor, tax professional, or other qualified expert before making investment decisions. Um, excuse me, this is a safe space. It's always a safe space. We're always here to learn. I encourage vulnerability. I encourage kindness. Ask questions, take notes. If you have not subscribed to the channel, make sure you hit that subscribe button. You have to be subscribed to ask us a question. So please make sure that you hit that subscribe button and we will get you going. Mark, I do apologize. I have no idea why I am being cut off here. So um, let
Oh,
me
it's all right. Take your
let me
time.
see if I need to move or just position this a little differently
Right.
because this like never happened. So I don't know why it's doing this, but all right, we're here, and
That looks
maybe
pretty good.
is that good? Okay.
Yeah.
All right. So, again, bringing back Mark Chambers, a fellow late investor, to share his experience with investing. You know what's been impactful and helped him become a better investor, consistent investor, someone able to share his knowledge with others. So, um, let me do this. So, Mark, thanks again for coming on the show. Appreciate you taking the time to be here
Absolutely. Thank you for
to
having me.
talk. Yeah, absolutely. To have this conversation, much needed conversation. So, today we're talking about the cost of waiting. I think, every time Mark and I get together, when we're planning and prepping for these shows, there's so many topics that we can talk about when it comes to investing in the stock market, specifically for Black people, and what that may look like. So, um, Mark, when we think about the cost of waiting, right? When you throw that topic out there, what comes to mind for you?
For one, how having done so early would have allowed me so much more freedom as I've gotten older. Because I've come to learn that money equals time. So you're trading when you go to work, whether it's for yourself or somebody else, you're trading time, and that's time away from some of the things you might want to do and enjoy in life. So, um, but yeah, just wishing I had started earlier and and had more control of my time at this stage in my life. Uh,
Yeah,
that's the biggest thing, and
exactly.
just knowing how much ground I gave up by just ignorance, not knowing, just being uneducated.
Right. And I think that that brings up a good point because when you have this conversation about time and us not knowing the importance of it when we're investing in the stock market, it's not lost on me that there's a reason there's a delay for us, right?
Mhm.
These conversations, I did not grow up around a table talking about investing in the stock market. I did not see people in the stock or talking about the stock market that looked like me, that sounded like
But not even just the stock market. I mean, even just conversations about basic financial literacy and
me.
freedom.
Absolutely.
Those conversations, I mean, much less the stock market. So
Right. Right.
none of those conversations took place.
You're right. You're absolutely right. And that's where it has to start, right? Because that foundational level of investing, like, I dropped a book, Beyond the Bag, Investing in Wealth Strategies for Black Women. And I think, one of the things that I look back on, I probably would have changed the title if I did it again, because I think people are so they're scared of investing, and they don't realize that before you invest, there's certain things you have to do, right? You have to know how to budget. You have to have the basic concept of understanding what it means to be budgeting your money, what it means to have money coming in, what it means to have money going out. And a lot of people haven't grasped that, right? They're just living paycheck to paycheck and trying to figure it all out.
And for me, it kind of worked in reverse. And I say that because when I first started investing, I didn't understand really, all the ramifications of what was happening. And, I knew you could make money in the long run, but I didn't really understand what was happening. And at the beginning, when I first started, I made some not good choices on the companies that I was investing in. So instead of seeing my portfolio climbing, I was watching my portfolio do a slow decline. So that wasn't really motivating for me at that time. But once I started learning and kept learning, and then I started to see uh, uh, the opposite happen. Actually, start going in the upward trajectory. I started to think, okay, this investing, there's something to this investing thing. So, are there ways where I can not sacrifice the way I really want to live, but cut back on some things so that I can invest a little bit more. So it worked in reverse for me in terms of the more I started to learn about the benefits of investing, the more money wise I started to become. So it kind of worked in reverse for me.
That's a good concept. I never even thought about it like that, but you're right. You're right, because I think I'm certainly, guilty of it too. So the first off, the term, the concept, pay yourself first.
Mm-hmm.
That was always a concept that I heard, and I was like, that's crazy. You don't pay yourself first. You pay your mortgage first. You pay,
Mm-hmm.
you pay insurance first. You pay your car payment first. And I never understood, what that truly meant, until I started getting into this work, and the
Yep.
understanding of paying
Yep.
yourself first just means setting something aside, whether it's investing or saving, even a small amount, even $5
Or
that
even even
you're,
even if it's just investing in your education.
yeah,
I
yeah,
mean, because knowledge is also power too. So when those I guarantee you, every time you read anything about the background of some of the most successful people, investors, you'll read in their biography that that person is well read.
yeah, absolutely. Absolutely. I agree. I think that that is one of the most underrated things. Like, yeah, investing in yourself is not always going to be financial. It can show up in other tangible ways. So yeah, I definitely agree with you on that. Um, so talking about the cost of waiting, right? Getting back to, why we're here and how important that is. The thing that I try to stress the most is the cost of waiting is really literal and figurative, right? Because especially even now in this market that we are in, I mean, we've essentially, with the exception of, you know, the pullback that we had in April, the market has been on a bull run for what, 2 years?
Absolutely, absolutely.
Easily, right? Easily. And bull run, that just means that assets are gaining money in value, right? So
Yeah,
the prices of stocks are going up. That that is something, and then bear market means they're going down. That's
absolutely.
something that again, one of those things when you don't know the terms, it can seem a little daunting. But anyway, so we're in this bull market that we've essentially been in for a couple years, and prices are at an all-time high.
All right.
So
Mhm.
you got the cost of waiting of now, you know, had you do you start investing now while prices are at an all-time high?
And here's a couple things. One, you have to go into investing with an investor mindset. And here's what I mean. Buying a stock today and looking to profit in a year from now, sell it for a profit a year from now, in my opinion, is not the definition of investing.
Correct.
Investing is buying something and planning on continuing to let that uh, 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 appreciate in value over the span of 10, 15, 30, 40 years. That's what most of the most successful investors. So you have to go into it with the mindset of this is long term. And if you don't, then that's going to be one of your biggest mistakes. So you have to go into it with a long term mindset. I think that's the most important part of it. And I lost my train of thought, which happens a lot, but I'm gonna start having to write them down. But
No,
but
yeah, that long-term mindset, right? And when we talk long-term, we're talking 5 years, 10 years, 20 years. You know, we are talking a time frame that's going to come with substantial increase. You got it back?
mhm. Yep, yep. So the other thing I want to bring up, I've learned this. Uh, you talk about is now with things at an all time high, a good time to invest. But here is what I've learned. There's you can look at it a couple different ways, and what I found to be true is that companies that have a tendency to consistently make all time highs typically keep making all-time highs. So it really doesn't matter if it's high right now. Guess what? That company is so established. They just made an all-time high last week, and guess what? They made an all-time high last month because that company is so strong. It knows how to run their business. So I've not I've started not shying away from those companies that are at all-time highs because that's telling me that they're doing something right.
Right, exactly. And I mean, I've been guilty of it too. It's about time in the market, not timing.
Absolutely.
You don't know what the market is going to do, but what can you do? You can continue to invest and you can protect your downside,
Yep.
right? So, you know, we're going to have corrections, right? We're going to see corrections, we're going to see drawdowns, and that is part of the process. But part of the things that people, I think, you know, this bull run can be deceiving, because there are going to be times when the market pulls back a little bit, and you got in at Nvidia, you know, on, say, right now I think it's trading at 183, 184, and people, you know, freak out when it gets to 179 after a couple, and it's like,
Yeah.
we're not worried about what's happening in a day or two. I
Nothing
want you
goes
to
straight up.
Exactly. I want you to think about October 2026, right?
Yep.
What's that going to be looking at like in October 2026? And then you're going to be looking at, oh, wow, when it's sitting at 235, 238, ooh, I should have bought more, right? So as
It,
long
you
as
know,
you're
and it's
protecting
really
that
easy.
downside, it's fine.
All you have to do is look at the particular stock chart that you're looking to invest. Okay, so today is so and so October 26th, 27th, or whatever. Okay, so what was the stock price on October 27th of last year? And then what was it on October the 26th or 27th 2 years ago? And if you see that it's continuing to be higher than it was the previous year, then what's the reason of not holding?
Exactly, exactly. So I mean, you bring up a really good point, Mark. So let me see if I can get this going right here. Because I think, you know, that's one of the things that scares a lot of people is the chart, right?
Hmm.
Knowing what's how to read a chart and knowing, you
Oh
know,
yeah, that's
how
great, 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 great point,
um
great point,
so
great
so
point.
yes, so we got a chart here. So I pulled up VOO. VOO is an ETF that tracks the S&P 500. It's a
Yep.
Vanguard's version of that. There are tons of ETFs that track the S&P 500, but Vanguard is pretty preferred. Um, but this, so I've got the chart up here, and you'll see in this chart that, you know, you've got these time intervals up here.
Yep.
And if you just look at a 1 day chart, which we've got here, you see, you know,
Up and
market
down.
open. Okay. You see just this gradual up and down. And unless you're a trader, you know, this really doesn't mean anything to you.
Mm-mm.
So when you talk about, you know, investing into a company, I always tell my clients, we're going here.
5 years,
We're going
5 or 10 years.
5 years. Look at
Yep.
that. Look at what it's showing. Up 103% in 5 years. VOO is up 103%. So when you look at 2021, VOO is trading at 329.01. It closed at 329.01. Today it opened at 627.74, right? So that's what we care about. That is what we
Absolutely.
care about, you know? And that's why we're not looking to do anything overnight. We are looking at, you know, the old adage is when in doubt, zoom out, you know?
Yep.
So when
Yep.
you're
That's a good
sitting
motto.
on top of that, you know, looking at that 1 day chart, or, you know, let's go 6 months. Okay. We'll look at a 6 month chart. Even then, you know, we've still got a gradual uptrend. So that's always want to see what we want to see, you know, when you're determining, okay, this is what I want to invest in. This is the bare minimum, right? We
Yep.
want up and to the right. We want up and to the right.
Yeah,
Um,
down and to the right is not good. Yeah.
right, exactly. So we want up and to the right. But it is part of the process. You always want to have that, but then know that, you know, when you're looking at a longer time frame, we that's what we want to see, those returns that are going to give us significant decline. I mean, excuse me, significant increase. And then I'm gonna just do one more, because this is a stock, I'll be transparent, that I got a little, I won't say burned, but it is one that I'm in the red in right now, and that's MVO. So Novo is the
So am
company.
I. I have that one.
Do you?
Yep. Yep.
Novo is
But I ain't
Novo
getting
is
rid
the
of it. I ain't
company.
getting rid of it.
No, I'm not getting rid of. Absolutely not. Absolutely
Nope.
not. So for those of you who don't know, Novo is the company that creates Ozempic, which is the GLP-1 weight loss drug that a lot of people have used. And I shouldn't, technically it's a diabetes drug to manage
Absolutely.
diabetes. However, one of the side effects is weight loss, which is, let's be honest, what a lot of people are using it for. So MVO is one. So Mark's saying he's down a little bit on MVO, but he's not selling. Tell us why you aren't selling, Mark.
One, I can't see your chart there. Let me hold on. Let me pull it. But for one, it's been a company that has been around for a long time, and it's going through just one of those spells that some companies go through. But based on my research and what I know about the company and the fundamentals, I think this is just going to be one of those short-term blips in their history, and I believe that it's going to recover. So now is the time to buy it when it's at its cheapest that it's been in probably 4 or 5 years.
Yep, exactly. So just looking at a year to date, you know, and this is a great example of what Mark and I talked about. This is what we don't want to see. You know, this can be daunting to a new investor. I made that a little bit bigger, Mark. I don't know how it showed up on
Oh
your
no, I
end.
just pulled mine up so I can.
Okay.
Yeah.
Okay. So yeah, so this is, as an investor, this is what you don't want to see. This can be like, okay, this is a stock I need to run from. And this is year to date is down almost 40%. I probably got in probably right around here, 78, between 70 and $80. Um, Looking at a 1 year chart, is down 53%. Okay. But what did I say? We're going to a 5 year chart. You look at a 5 year chart. What has it done? 56%. So I agree with you, Mark. I think it's going through something right now. And
especially with the political climate of everything, and the person in charge of health and that stuff, and playing a huge role in it in the healthcare business. But it's just one of those things. It's one of those things that you have to just kind of weather the storm. But that's the
right.
purpose of being. That's the purpose of. That's the beauty of being diversified. Because I also own several other stocks. One stock doesn't make or break my portfolio.
Yep, exactly. I agree. I agree. And diversification, is hard not to be tech driven right now, and I'm tech heavy. I'll be honest. My portfolio is certainly weighted in more individual stocks of tech and more ETFs of tech. So I'm definitely gonna capitalize on that. But I agree, having other stocks in other sectors, energy sector, which kind of ties into tech, but
Tech.
healthcare. Really, healthcare is an industry that I'm always going to invest in, because let's be honest, it's not going anywhere. It's absolutely necessary. So
Mhm.
keeping that in mind. So there's, yeah, you always just want to make sure that you're looking at that long-term chart, right? And thinking about that cost of waiting, again, bringing it back to that cost of waiting, is when you're looking at that cost of waiting, it can be to your advantage, right? Because again, if you were to get in on Novo right around here at September 2022, we're trading around here. It hit a high in 2024 of 142, right? So
Mhm.
that allowed you to potentially take some profit if you wanted to, take some profit, and then again, it's back down again. But the thing that most people don't realize, I don't know if you caught, Mark said a little bit about fundamentals and fundamental analysis. I rely on technical analysis a little bit more when it comes to my chart picks. And technical analysis is really just looking at the history.
Yep. Yep.
Like everything in this world, things tend to repeat themselves. Trends tend to repeat themselves. The same way everybody's wearing bell bottoms right now. Like trends are going to come around and around again. And so that's the stock market does that same exact thing, right? It goes kind of with the flows, the ebbs and flows. And you're going to have a pullback, but you are going to rally again. And it's all about that holding. It's all about holding on to that stock for the long term. So
Yep. And
um
and 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 you talked about it. We talked about it in the last video we did. But one of the things that I did at the beginning, and I think it's a good thing for others to do as well. But create a kind of safe foundation with the ETFs that you mentioned or we talked about last time. That really gives you a broad uh, coverage of the entire market, and
yep.
then start to maybe go into some of the individual companies from there. But I think the best way to kind of get started is just to be covered throughout a large coverage area with ETFs
Yeah, I agree. I
or
mean,
mutual funds if you're doing it in the if you're going through a brokerage or a larger spending larger funds or whatever. But
yeah. Most of the time, mutual fund. A lot of times, not say most. A lot of times, mutual funds maybe want a minimum balance.
yeah,
So that's why
more expensive.
ETFs are a little bit more advantageous than a mutual fund. And then there's also the tax implications that come with mutual funds that a lot of people don't realize
Yep.
too. So ETFs are a lot easier on the tax implications. You're going to expense ratios tend to be better. So the fees. So ETFs, yeah, ETFs, I think are going to give you that automatic diversification that you don't have to be a fund manager to know about, right?
Nope.
They do it for you, just like I showed you VOO. That's an
Yep.
ETF that tracks the S&P 500. So you're getting exposure to the 500. I think it's like 509. I think there's
Yeah,
590
somewhere around there. Yeah.
now. You're getting exposure to all these companies that, so you're getting, not just a diversification across market sectors, you're getting diversification across risk levels and things like that. You're getting
Banks,
exposure to those.
grocery stores,
Yeah,
practice. I
everything.
mean,
Yeah.
you name it. You name it. You're invested in it when you invest in something like that.
Yep.
McDonald's, Coca-Cola. I mean, Dillard's. You name it. It's in there. It's
Yep.
in
I agree. Excuse me. I agree. And yeah, and there's, when you look at that cost of ETFs or going back to VOO, that's something I always want to highlight is fractional shares. And again, the cost of waiting. A lot of people are waiting. What do you hear? I'll invest when I get a little bit more money.
there. Yes.
I'll invest when I get a little bit more safety. I'll invest. You don't need to throw the whole $500, $600 in. That's not realistic. That's not realistic for anybody, especially in
I
this economy.
started with $100.
Yes, yes, yes. I don't even know how little I started with. I'll be honest. But it wasn't a lot of money. And I, on my Facebook page, I have the $20 challenge. And so that's something that I share with a lot of new investors. You can start with $1, to be very, very clear. You can
Yeah,
start with
depending on the
$1.
brokerage, depending on
Yeah,
the
yeah.
brokerage.
As long as you find a brokerage, and all the big ones do, that allow you to buy fractional shares, Robinhood, Schwab, and Schwab doesn't actually. Robinhood, Vanguard, Fidelity. I'm sure, does M1 allow you to, Mark?
No, you have
No.
to you have a minimum starting. That's why I started with 100 because you have to
Okay,
have
okay.
a $100
So
minimum to start.
yeah. So a lot of brokerages operate the same way, but they're definitely not a one size fits all. So you certainly want to find a brokerage that works best for you. You also are not married to that brokerage. I use Robinhood and I use Fidelity because I think there's perks to both. So yeah, fractional shares and making sure that you're just starting. I think that is the piece. That is the piece that's missing for a lot of people, just starting.
And you said something too about just how you don't have to have a lot of money to get started. I think one of the problems when you talk about paying yourself is that it's not automated. A lot of the things that comes out of our checks, like for the government and state taxes and
Yeah,
stuff, it comes out automatic. We don't cry about it. We don't complain about it because it's automatic. And if you don't set up a brokerage that allows that type of ease of transaction, that you have to manually and physically do it yourself, it can be a little frustrating. But
yeah,
setting it up to where it's just automatic, and you don't have to think about it. It just whether it's $5 out of every check or $10 out of every check, or whatever amount you decide, or whatever interval, just make it to where it's automatic and you won't even miss it.
you won't miss it. You won't miss it. I agree. I agree. Because it's really easy to find another reason for that money if it's sitting in your account. And like you
Yep.
said, I mean, that's a great analogy. When Social Security comes out and our federal taxes come out, we can't do anything about it. But two, we learn to live with, okay, you know, I make 2,000, my check should be 1,800, and when it's all said and done, I brought home 1,350.
Right.
Like, but we learn to live with that 1,350, and we learn to still have our fun with 1,350, and we learn to still treat ourselves with that 1,350. So like, why not do 1,300? Take that $50 and pay yourself.
Yep.
Invest it into the stock market, and then you learn to live on that 1,300. Is easier than it looks. it becomes, I think this is, where our conversations ultimately always end up, Marcus. Mindset,
Yeah,
right?
yeah.
You have to change your mindset when you talk about investing in the stock market.
I just got done finishing a book called the Anxious Investor, and in it highlighted all of the various different uh, issues that prevent people from being successful as an investor, and one of them was loss aversion. And it went through a study and used statistics, but it basically was talking about how people are more afraid of losing money than they are excited about winning the same amount.
Mm, that's interesting and not
So
surprising though.
yeah, yeah. So risk aversion, loss
Yeah,
aversion. You so even though the odds of winning the same amount is greater, you're more afraid of
yeah,
losing that amount.
yeah. It's a scarcity perspective, right?
Yep,
So,
yep, yep. I want
when
to hang on.
you
I want to hang on to it. Yep.
yeah, exactly. I mean, again, this is something that I discuss in my book. Um, but again, the social worker in me, the part of me, that zooms out, is we have to work twice as hard to get half as much, right? Black
Yep.
people have to work twice as hard. Black women have to work three times as hard. So we have to work that hard to get half as much. The instinct is going to be what? I want to hold on to it. I
Hmm.
want to hold on to it. I have to protect myself, so that I'm okay, because these larger institutions, our jobs, whatever the case may be, or don't have my back. So I have to be willing to be able to provide for myself. And then obviously it's the historical context of what, black banking has looked like,
Right.
Black Wall Street. And every time we get something, it's taken from us. So all of that is like, we have to contextualize that in the discussion, because it matters and it's what keeps people stuck. And on the other side, I it's by design. I think it's truly by design. We have to push past that, right? We have to
Yep.
push through that, because I don't even know. I looked it up the other day. How many shares of Amazon does Jeff Bezos have? How many shares?
Yeah, crazy.
Yeah, right. I don't even know that I can pronounce the number. How many shares does Mark Zuckerberg have? Right?
Hmm.
You think they're going to let those companies fall? That's a huge part of their net worth, is the stakes in their company.
Absolutely.
um so they're not letting those companies falter, and that's when it becomes really easy to invest, I think, because it's like, you don't really have to do anything. You think Amazon's going anywhere?
Right.
No. You think Google's going anywhere? No. Everybody hates Bing. Like, you think
And
no.
Tasha, I think just it's really all about just getting started, because once you get started, and then you're going to just by osmosis just develop an interest, a little bit more heightened interest in where your money is going,
I
and
agree.
that's going to just go down a rabbit hole that is going to educate. And again, I'm coming from experience, and so I didn't hardly know anything about investing when I started, and now I mean I can read stock charts. I know how to see different patterns and charts. I know how to read, financial statements. I mean, none of this stuff I knew how to do 3 or 4 years ago. But
Hmm.
it just because as I've started to realize the benefits of investing, my interest level in it has gotten more and more heightened, and so I've just continued to educate myself on it. And I
Yeah,
think once you get started, it's just getting started.
I agree. I agree. And yeah, that idea that you become more interested in what your money is doing, you become more responsible in what your money is doing, you become more engaged,
Yes,
and you want to be the one driving your money. And
yes.
that's what That's what I felt when I started to invest. I
Yes.
did not realize how much control I had over my money. Well, initially, how much it had over me. And I wasn't making decisions that would one make my money better, right? Would make me better. But after I started investing and I saw, oh, if I treat my money better, it treats me better.
Amen to that.
And really, I mean, that's from the smallest thing to, like, again, just going back to paying yourself, going back to using that $20 to invest in the stock market rather than whatever other way you throw away $20, right? We do it at Starbucks.
And I'm glad you said that, because how I actually got started was trying to. My first go around didn't go as well, but when I got serious about investing, how I got back was I was in the middle of some bad habits and stuff, gaming and spending money on stuff I didn't need to be spending money on. So
Mm-hmm.
I said, okay, this is a waste of money. What else can I do with this money? And so I literally took the money I had been spending on a weekly basis on those other two things, and I think at the time it was $44. I said, okay, I got $44. I've been wasting every week. I'm going to take this $44 every week and invest. And that's exactly how I got started. To breaking some bad habits, I found $44. So I had to
Right.
figure out what I was going to do with that $44.
Right.
And then
Exactly.
from there, it just has continued.
Yeah, and that's all it takes. That's all it takes is just that slight shift in mindset and saying, okay, I want to do something differently. I want to get somewhere that I haven't been able to get. And there's not many things that you can guarantee, but you really can't. If you're investing in a quality company and you're investing for the long term, you're going to win. You're going to win.
Absolutely.
You're going to win. The problem though, Mark, I think what I see with most people, nobody wants to wait.
Yes.
Nobody
Yes.
wants to
Yeah.
wait,
That's the biggest thing
right?
right
Nobody
now.
wants to wait. And it's so crazy because you're waiting anyway. Most people are, if you're gainfully employed, if you're contributing to a 401k or some other retirement plan, you're dollar cost averaging that anyways.
Yep.
You
Yep.
are contributing to that every 2 weeks,
And
every
you
week.
have no control. You
You
really
have
don't have much
no
control.
control. Yeah, you have no control over that. So you're investing every 2 weeks, or like again, whatever your pay schedule is. And you're doing that for 40 years. You're doing that
Right.
for 40 years and you have no idea what you're investing in. And then when I say, well, what about a Roth IRA? Oh, I don't know about that. I don't know. And I'm like, do you really think your employer is your financial advisor? Because they're not doing anything special. You can do this. You
Yes, and that's
can
and
do
that's a
this.
concept we have to understand. Years ago, when there was all of these major factories and manufacturing businesses, and people would work in these coal mines and whatever these industries were, and they would work for 40, 50 years, and these companies would give them pension. Companies don't do that. See what companies did. It was called defined compensation.
Mhm.
Define they had defined compensation that they were going to uh, allot to every employee over an extended period of time. So if you work for 30 years, this is what you got. If you work for 35
Mhm.
years, this is what you got. If you work for 40 years, and that's why those people were motivated to keep stretching out their tenures, because it meant that I got more in return. And
Right,
so
right.
companies know they no longer give their employees defined compensation for retirement, and now they give them defined contribution. So
Mhm.
instead of saying I'm going to take care of your retirement for you, they have changed the mindset to, no, I'm going to give you some money, but you have to be in control of what you do with it.
Yeah, yeah, agreed, agreed. And there is, and that's the other thing is that control is, it's somewhat of an illusion when you talk about the 401k versus the IRA. Because you don't have any. First of all, you can't invest in individual stocks, right, through your 401k. So
And your
that's
company determines.
your company. Exactly, your company determines. They have a preset of packaged stocks that they're going to allow you to invest in, right? Your strategy is your strategy, your family goals. That's not taken into consideration when you're looking at those, whatever you're invested in. Your company's not looking at that. So if Mark and I work at the same place, and we both do a say an income plan, so a target date fund or whatever, it takes no regard into what our family situation is. Our investment is based on the date that we retire, and that's
Yep.
it. That's
Yep.
it. There is no other strategy. Whereas if you're looking at an IRA or even a taxable brokerage, you're the quarterback. Okay. You're the quarterback of that. You are running the plays, or offensive coordinator, whatever analogy you want to use. But you are in control, right?
Yep.
You are in control. And it is, again, going back to what I said, it's much easier. It's much easier than people realize to be in control of these accounts. Um, and they are going to serve you far better than what your 401k, or again, any other employee sponsored retirement plan is going to do.
What's you're a little bit more involved in 401ks and different things like that. What's the average return on yearly return on the very and I know there's a lot of them, but just in
Yeah.
general, what's the
So
average return on one?
it depends, what your
Whether
let
you're
me
aggressive or whether you're
Right, exactly,
conservative.
exactly. So like someone right now who's in a target date fund. So most people are using a target date fund to invest, which is, like I said, 20-year-olds walk in and they say, I'm gonna work for the post office. And so 20 years, they're gonna put me in a target date fund 30 years from now. So they're gonna put me in a 2055 target date fund. What's going to happen is, those first 10 years or 10, 15 years, they're going to be aggressive, right? Yeah,
Okay, I see.
they're going to be aggressive for those first 10, 15 years. So you're going to have great, you might, you're going to be heavily weighted into stocks. You're going to be have a small allocation into bonds. You might, if you're lucky, have some international exposure, but you are
Mhm.
mostly going to be aggressive. Now as you age closer to retirement,
They start
um
scaling the aggression back. Yeah.
exactly, exactly.
Mhm.
And so, by the
Mhm.
time, which, don't get me wrong, because as you get closer to retirement, your risk should be lower, and
Right.
because you're preparing for retirement. But you're looking at, in some of these portfolios, they're taking you all the way over to like a 60-40 bond split, or 80-20
Oh
bond split,
no.
where you're looking at a bond, that's giving you 4%.
Yeah,
Four
no.
percent, 3 to 4%.
Yeah.
That's crazy. At that point, you might as well put it in a high yield savings
Yeah. Yeah.
account.
I can do that myself.
Yeah, exactly, and not risk it at all.
Mm.
And just pay the interest from your high yield savings. I am of the mindset that I at least, you have to at least be at 10%, right? You have to at least be getting the returns that the S&P 500 is given. For the duration, I'll be honest. I don't, I'm diversified in my employee sponsored retirement plan, my TSP. I think I'm at 80% in our C fund, which is a S&P 500. Um, no, I'm 70% there, 20% small cap. Again, still taking some risk. These are,
Right.
up and coming. And then 10% international, which is on a tear this year. But that diversification allows me, I'm averaging 15% in every fund. And I'm good with that. I'm good with that
Yeah,
because
absolutely.
I have my IRA and I have individual stocks in there returning 40, 50, 60%. So 100%
Absolutely.
in some cases. So that's the beauty of that taxable brokerage or that IRA.
Yep.
Giving you to is some individualized exposure that you're just not going to be able to get.
Yeah, I and not and and not to just to kind of give some clarity or some validation, I guess. So over the course of, I've been invested now. I was really surprised when I saw this number, but I have a portfolio tracker that I started using 2 or 3 years ago, and I just realized that one of the numbers was the that it tracks was the actual yearly average of my portfolio, and once I figured it out, that's what it was. I was like, wow, that's pretty. I guess that's pretty good. So over the course of the 3 or 4 years, I'm averaging about 21.5% a year. So
That's
I'm
beautiful.
pretty happy with that.
Yeah, yeah, exactly, exactly. And again, it's just is regular people. We're regular people who decided, okay, I want something different. I want something different. I don't want to work just to have money in my pocket, right? I want to be able to have something, some equity. I want to be able to have some passive income. I want to be able to, whatever I decide to do, if I want to leave resources, I can do that.
Absolutely, and that's another thing. I would definitely, uh, I see I pass by people all the time that I would want to help if I had the means to do so, and at some point I want to be able to get to that point where if I know somebody's in need, I don't have to. I ain't got to wait for them to do anything. I just take care of it myself. You know what I'm saying?
Right,
That would
right,
be that would be a good place to be, and know that you're contributing and being a positive influence in just other people's lives, not just your own.
right, right. I agree. I think is one of the things I've loved most about being, financially secure is being able to two things. One, actual have the financial resources to help people, but also share the knowledge. Being
Absolutely,
able
yes.
to share the knowledge and get them to a point that they are able to make those decisions and make, if it was a poor financial decision, excuse me, that got them into it, that they're able to move past that and look at, how to become better in terms of any type of financial resources and understanding, what's out there. Because again, going back to what I said earlier to start things off, sometimes you don't know what you don't know. You don't know what you don't know, and until you have someone showing you, and until you're willing to listen and take that risk, it's really easy to be stuck
Yep, yep.
in that same place. So yeah, I think Mark, the when we talk about the cost of waiting, another thing that I hear is we kind of touched on is people just thinking they don't have enough knowledge, thinking that they have to have it all figured out. Um, and that's not the case. That's not the case.
I used to be a big gambler when I was younger, and one of the phrases they used to always say when you're around other gamblers is "scared money don't make no money."
Yeah,
And
I
but
agree.
that's really true. I mean,
Right.
you're not going to create financial freedom by sitting on top of whatever money you got. It's not
Right.
you're not going to it's just not going to happen.
Yeah. And I agree. And you have to protect yourself. And I think that is the big difference, right? Between like gambling, well, one of the many differences, but this is, you can protect yourself.
Absolutely, absolutely.
One of the things that I'm always asking my clients about before we start any type of investing education is, do you have an emergency fund? Do you have some money that if you get into a bind, you can access? Because
Hmm.
it might not be the greatest business model, but I want to make sure you have that before you go chasing returns in the market. Because
Right,
here's what's
right.
going to happen, right? You're going to get in the market, and then you're going to have this experience that you need this money. You don't have an emergency fund. What are you going to do? You're then going to go cash in because now you're up 200% on Nvidia, and you feel great. You're like, oh, I just pull it out, not realizing taxes. not realizing, penalties, not realizing all the things that might come with whatever account you're
Yeah.
using. And then you're kind of right back where you started, but now it's almost worse because now if you owe the government, we know they're going to get theirs.
Yep.
So, yeah, there's so many conversations we can continue to have.
But we've touched on a lot of different things today, but it kind of just evolves around one's willingness to educate themselves and to just be willing to learn and try new things. You're never going to evolve staying in the same place. You're never going to evolve or get to places where you don't want to go, or get to places where you want to go by being the same person you was yesterday.
Exactly.
The same person you was yesterday, it didn't get you there. So you're gonna have to
Right.
do some things different in
Do
order to go
something.
to different places.
Right. Exactly. So, I mean, we'll continue to have these conversations because I think they're much needed. We'll continue to sow these seeds, Mark, as we,
Absolutely.
in these,
I,
in these
I'm excited
conversations.
for the
Yeah,
opportunity.
yeah, absolutely. So thanks again, Mark. Let me just make sure we don't have any questions because I've been operating in kind of a weird setup here. So hit the like button and the subscribe button. Always share. Um, and I think what we'll do. All right, we don't have any questions, Mark, but what we'll continue to do is just start, keep sharing this information. Whatever questions we can answer to help people feel at ease and help them understand the importance of investing sooner rather than later, and
You're not going.
buying back that time.
You're never going to get any younger. You're not going to get any younger.
That's true. That is true, Mark. So thanks again, Mark, for being on
Absolutely.
this
Absolutely. I appreciate you
edition.
having me again. Thank you.
Absolutely. And we'll do it again. Mark is here the last Monday of every month. Beyond the Bag Investing, excuse me, Beyond the Bag Lunch Money Talks. We'll continue to break down the market, and I like what we did this week, pulling up the charts. So
Yeah,
maybe
yeah, yeah, yeah.
we'll pull up some charts and get into some companies, get into some returns that
Absolutely. And just start and talk about some of the things that maybe we've been comfortable investing in
yeah, absolutely. I think a
and
lot
start.
of people want those returns, right? They want to see those
Yep.
returns, and we can show those. Show a couple companies next time we come together and show some wins that we've had in the market and some successes that we've had in the market over the last couple years. So
Absolutely. It's good.
um,
It's kind of cool to see that we both have Novo in
yeah, yeah.
but yeah, I ain't getting rid of it. I
No,
think
I
my
agree.
I think my average price is like $85 right now, so I
Yep.
need to buy some more.
Yep, exactly. I agree. So we'll keep looking, we'll keep holding, and
Yep.
I'll see you again in at the end of November,
Yep.
Mark. Again, I'm Confessions of a Black Female Investor here every single Monday, lunchtime, 1 p.m. Eastern, 12 p.m. Central. What's in my bag? Lunch Money Talks, breaking down the stock market. If you are not following me, please go follow me on Instagram, confessions_Black Femme Investor, Facebook, Confessions of a Black Female Investor, and hit that subscribe button on YouTube if you haven't already. All right, y'all have a good week. Thanks, Mark.
Peace.
See ya.
Have a good one.